Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS for 10 long years. I've been in private practice for 42 years. You should let my years of experience and wisdom kind of work for you. I'm just giving you information. I don't like sell myself. I am available for representation. I'm really good, but let me explain to you the IRS trust fund process and what goes behind the scenes on the IRS trust fund. So I used to work these cases. I used to set up trust fund penalties. So as a revenue officer, only a revenue officer works these cases. So I would get a file, have a 941 file, payroll taxes. Well, it's my job to go out and first of all collect the payroll taxes. The job is to collect the entire debt. What IRS did is they wanted an insurance policy that the trust fund money would be paid. What's the trust fund? It's the money that you actually held in trust for the employee. What was so on a 941, they would want the money you withheld and the Social Security that you withheld. They want that money. They don't want the penalties and interest, and they don't want the Social Security that you kicked in for them. So once again, the trust fund consists of the withholding that you took out of their check and the Social Security you took out of your check that you held for them. That is called the trust fund. You held that money, you held it in trust for them. When that's not paid, what happens is you've given out W-2s to people and they've filed their tax returns. Many of them may have got refunds. The problem is this: IRS never collected the money from you, so they must enforce the trust fund. There's a penalty called 6020B that allows them to go ahead and collect that money and set the assessment up against you personally or those the revenue officers feels were responsible to pay the debt. So when I went into a business, I'd kind of I'd interview the people. Not hard to do this. You find out who signs the checks, who controls, directs, does it fire. There's a 4180 form that you will have to fill out one day. The revenue officer will make the principals fill this out. You'll kind of get a sense of ownership when you talk to people about the business. You may go in and talk to some of the people that work there. Who runs the business? Who controls the business? What's going on? But the bank signature cards really put the nail in the coffin. Now, many people are secretaries and say, oh my God, I got hit with this penalty. I wrote checks. What am I going to do? But the IRS still sets you up for the penalty. What IRS's job is as a revenue officer is to go in and make a determination who truly was responsible for this trust fund liability. So what IRS does is you have your 941 liability you have with penalties and interest, and then IRS takes out of that the trust fund and assesses it against the people who they deem responsible. So you can defeat this in many ways if you can. I mean, some people can't and some people can. If you think you were unfairly held responsible, that's when you want to go ahead and fight this. Remember, I will tell you, if you have signed the checks yourself and you ran the business, it's a small shop, mom and pop operation, you're not going to get out of the trust fund penalty. I'm just letting you know. I'm an expert in the trust fund penalty, so if you think you have a case, you can call me. I'll look at it. But remember, IRS, the revenue officer's job is to make it. I've had one company where they felt 12 people responsible. I've had companies that only one. I have companies at 4. I've had people in my office actually break out in a fist fight because this person wasn't going to be set up, and everybody got really mad. Call me if you have any questions, and thank you so much. I appreciate it. Give me a subscription.